Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks are gapping higher or lower at the open, typically from either an earnings announcement or another news-related event. When this happens, it creates an opportunity for traders. The opportunity is for traders that can identify a specific price level where a stock will first be drawn to like a magnet and secondly have a price reaction from in the other direction. In the course, traders learn exactly how to calculate these specific price levels. What that does is it gives traders an added confidence in their trading because they then understand why these stocks will be drawn to these areas and have a price reaction from these areas. Learning this strategy certainly gives traders a whole different outlook on why the market moves in the manner it does at times. Traders also learn which specific stocks this strategy works the best with. It doesn't work with all stocks. There are particular criteria that's taught in the course. The second strategy in the course is known as the gap fill trades. When stocks do gap higher or lower at the open, it leaves what's called an open gap. These open gaps will be filled at some point in the future. It could be today, and it could be years from now or anywhere in between, but they will be filled at some point in the future. I give traders a tool to track them, and I teach traders how to trade them. Not all trades are created equal, so the trade depends on how the stock is coming into the gap fill level. It's very, very important. The other thing I do is give traders an opportunity to get my gap trades each and every day sent to them at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of the exact email that went out to traders this morning. As you can see, it arrived at 9:02 a.m. Eastern Standard Time. This morning, we had 4 potential gap trades on the board. It was a relatively slow morning, but we have to take exactly what the market gives us. Today, the market was giving us 4 possible opportunities. The other thing we want to note about this list is we're only interested and only willing to trade the stocks that come into the specific price levels that we calculate. If a stock does not hit the specific price level, we don't want the trade. It's a no trade. It's off the board. So out of this list, only one stock today came into its level. That was YRD. I say gap lower. Support levels are $33.83, $32.60, and then $31.37. Stop and profit target is about 23 to 40 cents. These are minimum profit targets. The other 3 stocks didn't hit their levels. SLCA came close, but it didn't get there. It was about 30 or 40 cents away, but unless it hits the specific level, we don't want the trade. The other thing I do is I send out a list of potential gap fill trades for the day so traders have more opportunity in front of them. Some days we get stocks that fill their gaps and other days we don't. Today, we haven't had one fill its gap yet, but we did get a morning gap trade as we normally do at minimum of 1. So we're back on the chart of YRD. Let's talk about this for a minute. In the morning, the stock was getting a pretty significant haircut from yesterday's close. The stock closed yesterday up at about $38.26. The stock was opening today at $35.40 and immediately spiked lower. Now I want to talk to this spike for a minute. The stock had a wide spread at the open. That happens sometimes on the stocks that don't trade a tremendous amount of volume. This stock certainly fit into our criteria. However, it doesn't trade a tremendous amount of volume. So the market maker widens the spread, and what happens is, at times, you'll get traders out there putting a market order in to sell a stock. That causes the stock to spike lower real quick, and then normally you'll get that snap back, and that's exactly what we saw this morning with YRD. In fact, I'll take this chart down to a 1 minute time frame so we could see specifically what happened. We saw the immediate spike lower. The stock went a little bit lower than I would have liked or any other trader would have liked. However, what you see here is immediately got a snap back, and in just 12 minutes, the stock was at a high of $36.69 for a tremendous rip higher. That's a $2.86 rip higher in a matter of 12 minutes after the opening bell. And that's not from the bottom, that's from the level of 33.83. Now we're back on the 10-minute chart because I want to point something out to the traders out there. As you can see, the stock came into the second level given out in the morning email at $32.60. However, what you see here is what we call chart consolidation for about 30 minutes. What we like to see is a stock that comes straight into the level. That's not to say the $32.60 level won't work or it isn't going to work. You can see right now as I make this video, the stock is fighting around that level. However, it's about the probabilities that we're looking for. We're looking for trades with the highest probability possible. And when we see a stock consolidate over a level, such as in this case 32.60, it reduces the probabilities of the trade. It doesn't eliminate the trade necessarily, but it changes the trade. All this is discussed in the course in great detail. Traders who have taken the course know exactly what I'm talking about. But what you can see is the importance of these price levels. Look at the 33.83 level. The stock came down, spiked through it, ripped back higher, and where did the stock go when it sold back off? It went right back to the 33.83 level and hung there, bantering back and forth for about an hour before trading lower towards the second level. And as you can see, the stock is still fighting the second level. These levels are extremely important on the charts, and traders learn exactly why, and when they understand why these levels are important, it changes the way they look at the markets. Understanding this phenomenon gives traders an added confidence in their day trading and a whole different outlook on why certain things take place across the markets. This gap trading strategy is a fantastic opportunity for you to learn something that you can use each and every day for the rest of your trading career. Traders can learn everything they need to know in order to be successful trading the gaps. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.